You've probably heard the term futures trading thrown around, maybe on the news or from some finance guru online. But what does it actually mean? Well, today we're going to cut right through all that noise. We're going to break down this powerful financial tool and really dig into how you can trade momentum, not just assets, and get a handle on the huge concepts of leverage and risk.
So let's just kick things off with a pretty big question. What if trading wasn't about trying to predict the future? What if it wasn't even about owning a physical thing, like a share of stock or a piece of gold? What if it was just about riding the wave, aligning yourself with the market's current direction? That fundamental shift in thinking is exactly what we're diving into.
In this quote, man, it just nails the mindset perfectly. It's all about shifting your focus away from trying to be a psychic, you know? You stop trying to predict the future, and instead you learn to just read what's happening in the present moment. The whole game changes from asking what's gonna happen to what's happening right now.
Okay, so if we're going to talk about trading momentum, we first need to understand the actual tool we're using. So, first things first, let's break down what futures actually are.
All right, don't let the fancy name fool you. At its core, a futures contract is really simple. It's just an agreement. It's a deal to buy or sell something at a price you both agree on today for a date somewhere down the road. And that something could be almost anything. You could be trading the S&P 500 index, which is kind of like placing a bet on the health of the entire U.S. economy. Or it could be a commodity, like crude oil, a direct play on global supply and demand. Now, this next part. This is the single most important difference you have to get. It's a total game changer. When you buy a stock, right, you own a tiny slice of that company. You buy gold, you can hold that shiny bar in your hand. But with futures, nope. You don't own the underlying thing at all. You are literally just trading the price movement of that asset. It's all about betting on which way its price is going to go, up or down. Okay, so you might be thinking, wait a minute, if I don't actually own anything, what's the point, right? Why are so many professional traders absolutely drawn to these markets? Well, that's exactly what we're getting into next.
Well, there are some pretty huge advantages. For one, these markets are what we call highly liquid. All that means is there are tons of buyers and sellers, so getting in and out of a trade is super fast and easy. Plus, they're open almost 24 hours a day, so you can react to big news coming out of Europe or Asia while most people are asleep. But honestly, the real superpower here is that you can go long, betting the price goes up, or go short, betting it goes down just as easily. That means you can find opportunities whether the market is soaring to new highs or, well, crashing.
But, and this is a huge but, with that kind of power comes some very serious risk. And that brings us to maybe the most critical, most misunderstood concept in all of futures trading. It's a true double-edged sword, and it's called leverage. I want to be crystal clear on this. Futures are leveraged products. That one fact, that simple statement, is what makes them so powerful, but it's also what makes them incredibly dangerous if you don't treat them with absolute respect.
So what does that actually mean? What does leverage look like in the real world? Well, it means you can control a massive position. We're talking $100,000, maybe even more. And you do it with just a tiny fraction of that money from your own pocket. It's how you can see these absolutely explosive gains. But, and you have to hear this part, it is also how your losses can get magnified just as fast. This kind of power isn't a toy. It demands serious respect.
And that's why this kind of mindset is it's non-negotiable. When you're dealing with leverage, you cannot be a gambler. You can't be chasing trades based on emotion or a gut feeling. The only way, and I mean the only way, to handle this kind of risk is with a rock-solid foundation of structure, discipline, and consistency.
Okay, so if discipline is the mindset, what's the actual tool you use? It's your strategy. And in the world of futures, your strategy isn't just, a nice thing to have. It is literally everything. You have to remember, we're not talking about some slow, sleepy market here. Things happen, and they happen fast. We're talking blink of an eye fast. And you've got to make decisions right in the thick of it, under a ton of pressure. And in an environment like that, fast, high stakes, what's the one thing you need more than anything else? It's clarity. Just pure, simple clarity. The ability to see through all the noise, ignore all the hype and distractions, and just execute your plan without hesitating. That, right there, is the difference between success and failure.
Which brings us right to the fundamental challenge. The final question for anyone who wants to do this. How in the world do you actually find that clarity in a market that's so chaotic?
And so we end right back where we started, with a question. Now that you get the what and the why of futures trading, you understand momentum, you respect leverage, you see the risk.
The ultimate question is this: how do you build a strategy that gives you that crystal clear vision in a market that is, by its very nature, noisy and chaotic? Because finding the answer to that, well, that's the key that unlocks the whole thing.